Price is the only truth that pays because it is the final vote. Every opinion eventually bends to it. Darvas learned this the hard way. He would buy stocks that looked cheap, logical, and promising. They kept falling. He would ignore stocks that felt expensive and irrational. They kept rising. The market was not emotional. He was. And the market punished emotion with precision. So Darvas changed the question he asked. Not why is this stock moving, but is it moving? That single shift separated him from the crowd. Amateurs want reasons. Professionals want results. The tape does not explain itself. It confirms itself. He began studying price behavior the way a doctor studies symptoms. When a stock stopped making lower lows, something changed. When it held a level repeatedly, something mattered. These were not predictions. They were observations. Observation removes ego. Ego is expensive. Darvas noticed that strong stocks rested before rising again. They did not collapse. They paused. They trapped impatient traders. Fear pushed people out early. Greed pulled them back late. The stock went higher without them. This is where patience stopped being passive. It became active discipline. Waiting was not laziness. Waiting was filtering. Every hour he did not trade was capital preserved. Every trade he avoided was risk avoided. Most traders confuse activity with progress. Darvas saw activity as leakage. Each unnecessary trade leaked focus, capital, and confidence. He stopped trying to participate in everything. He waited for pivotal points where probability tilted slightly in his favor. That tilt was enough. Darvas never looked for certainty. He looked for alignment. Price, volume, and structure had to agree. If one was missing, he did nothing. Doing nothing protected him from himself. This was the psychological turning point. Darvas realized his biggest enemy was not the market. It was impatience disguised as opportunity. The amateur needs to feel involved. The professional needs to stay solvent. Losses still happened. Waiting did not eliminate pain. It controlled damage. When he entered, risk was defined. When he waited, risk was zero. That alone shifted the odds. Darvas began journaling one simple question after every trade. Did I follow my process? Not did I make money. Process was the only thing he could control. Outcome was noise. Over time, a pattern emerged. His best trades came after boredom. His worst trades came after excitement. Boredom kept him selective. Excitement made him reckless. This is the paradox amateurs never accept. The market pays you for restraint, not enthusiasm. Darvas stopped chasing. He positioned himself to be chosen. That is why waiting feels uncomfortable. It starves the ego. It removes stimulation. It forces you to confront uncertainty without action. Most traders cannot sit with that tension. Darvas learned to. He understood that cash was not a failure. Cash was optionality. It allowed him to act decisively when conditions aligned. Without cash, patience is impossible. This is where the Darvas box truly begins. Not as a pattern, but as a mindset. A refusal to act until price proves itself. A commitment to react, not predict. The amateur enters to avoid missing out. The professional enters to confirm strength. One chases movement. The other waits for permission. And permission always comes quietly. Darvas did not know the name for what he was building yet. He only knew it worked. Each time he waited, his decision improved. Each time he rushed, his account suffered. That feedback loop trained discipline. Discipline replaced hope. Structure replaced instinct. This is the moment most viewers miss. Darvas did not become patient by personality. He became patient by pain. Pain taught him that survival mattered more than brilliance. Survival gave him time. Time compounded. That compounding effect is invisible early. It only shows later, when others are gone. Darvas stayed. And staying changed everything. The next lesson reveals how he controlled risk before controlling returns in brutal simplicity with unwavering consistency. Darvas discovered something that offends amateurs deeply. Price already knows more than you ever will. News arrives late. Opinions arrive biased. Price arrives honest. The amateur argues with price. The professional listens, observes, and waits for confirmation before acting. Darvas watched stocks react opposite to headlines repeatedly. Good news failed and prices sank. Bad news appeared and prices refused to fall. Logic felt violated, but accounts were preserved by obedience to price. Fear and greed argued loudly. The tape spoke quietly. So he stopped listening to explanations. He stopped predicting reactions. He watched the tape like a language, not a story. Price was vocabulary. Volume was punctuation. Silence was a sentence ending. One stock taught him the lesson permanently. It moved between $28 and $30 for weeks. No trend. No excitement. Capital felt trapped. Amateurs called it dead money and left. Darvas stayed curious instead of bored. Then something subtle changed. Volume increased without drama. Price pressed against 30 and refused to fall back. The box tightened. Pressure built invisibly. Most traders needed news to act. Darvas needed confirmation. When price broke above 30 and closed strong, he bought. Emotionally, it felt late. Psychologically, it felt expensive. Professionally, it felt correct. The market had spoken first. He responded second. This was the protocol he refined and repeated. When price stays within a range, the market is undecided. When price breaks above the range with volume, decision is made. The range became the Darvas box, not as theory, but as evidence. The amateur buys inside the box, hoping for prediction validation. The professional waits for the pivotal point where probability shifts slightly. Hope disappears. Structure replaces it. Darvas accepted a hard truth. You do not need the bottom. You need direction and control. Being early feels smart. Being early is usually wrong. Being late feels foolish. Being late is often profitable. Risk became measurable because entries were defined. He knew exactly where he was wrong. That allowed a stop loss to exist logically, not emotionally. Without structure, stops are guesses. With structure, stops are boundaries. Here is the maxim he lived by. Being late costs less than being wrong. A late entry risks missed profit. A wrong entry risks survival. Professionals protect survival. But here is the danger amateurs ignore. Breakouts fail. Markets lie sometimes. False confirmation exists. Darvas experienced this painfully. He bought a breakout that reversed immediately. The loss stung. The lesson stayed. He did not widen his stop loss in hope. He exited. Small loss. Small damage. Capital intact. Ego bruised, but alive. Amateurs average down. Professionals step aside. This is where position size quietly mattered. Darvas never risked more than he could emotionally accept. Small size allowed discipline. Large size demanded hope. Hope is expensive. Each failed breakout taught patience. Each successful one built confidence. Over time, probability favored him, not because he predicted, but because he filtered relentlessly. Doing nothing remained his edge. Waiting as a position protected him from noise. The market offered thousands of choices. Darvas selected only a few. Darvas noticed another contrast forming. Amateurs needed excitement to feel involved. Professionals needed clarity to act. Excitement shortened patience. Clarity expanded it. The box forced stillness until evidence appeared. He wrote prices by hand while traveling. Delayed data did not hurt him. It helped him. Noise disappeared. Only decisive moves survived the delay. Confirmation became obvious or absent. This discipline reshaped his identity. He was no longer chasing markets. He was waiting to be invited. Silence itself became information. Next comes the most uncomfortable rule of all. How Darvas defined risk before reward, and why position size mattered more than prediction. That lesson separated gamblers from professionals permanently, and it forced Darvas to confront fear directly, not intellectually, but through numbers, limits, and pre-planned exits. The next step changed everything and made consistency possible. It is where most traders fail. Completely consistently. Most traders don't blow up in one trade. They blow up by refusing to exit. Hope is the amateur's favorite strategy. Darvas learned this after watching a profitable month disappear. A breakout failed. He widened his stop. Fear asked for patience. Greed demanded recovery. Price kept falling. Professionals don't negotiate with risk. They define it first. Darvas created a rule that felt brutal but worked. Every trade had a predefined stop-loss. No exceptions. Anecdote. Darvas entered a clean breakout. Price reversed immediately. His stop triggered. Small loss. Days later, the stock collapsed another 40%. He didn't feel smart. He felt protected. Here is the protocol. Your stop defines your risk. Your position size respects that stop. Losses are accepted before entry. Amateurs widen stops to avoid pain. Professionals accept pain to avoid catastrophe. Risk stopped being emotional. It became structural. Maxim. Small losses are rent. Big losses are eviction. This rule changed Darvas psychologically. Losses no longer shook him. Confidence stabilized. Capital survived. And something unexpected happened. By cutting losses fast, Darvas created space for something rare. Big winners. But most traders sabotage winners too early. Fear makes them sell strength. Darvas learned the opposite behavior, and it multiplied everything. The next lesson offended his instincts. Professionals do not take profits randomly. Amateurs grab relief when price moves in their favor. Darvas learned that fear exits winners early, while greed stays with losers. He watched a stock break out, rise, then pause. The amateur voice whispered, "Lock it in." The professional voice waited for confirmation. Darvas noticed that strong stocks rested without breaking their box. Price moved sideways again. This was not weakness. It was preparation. Here is the protocol that followed. Once a stock breaks out, your stop moves only one direction. Up. Never down. You pyramid only after confirmation. Add size when price proves you right, not when you hope. Darvas added small increments. Position size increased slowly. Risk stayed controlled. Fear stayed quiet. Maxim. Winners deserve patience. Losers deserve speed. One trade taught him permanently. He pyramided a winner that kept respecting its box. Each ad felt uncomfortable. Each ad followed confirmation. The stock doubled. Then tripled. His biggest gains came from sitting, not trading. Waiting was a position. Amateurs confuse activity with progress. Professionals understand stillness compounds. Darvas traded less as his account grew. This required patience that cannot be taught. It must be trained. Losses trained him. Rules protected him. But pyramiding only works if risk stays small. This leads to the final discipline. When to do nothing. Darvas missed many moves. He ignored tips. He let stocks run without him. He slept well. The amateur needs action. The professional needs permission. Knowing when not to trade preserved his focus. Capital waited. Opportunities filtered. The market always tempts impatience. Darvas learned that boredom was a signal. If nothing met his rules, he stood aside. That discipline completed the system. Entry, stop size, add weight. No prediction. No opinions. Just process. This is why his fortune came slowly at first, then suddenly. And this sets up the final realization. The market does not reward intelligence. It rewards obedience. That obedience was the real edge. It is the hardest part. It comes last. Most never reach it. The next chapter reveals why simplicity defeated complexity. Why fewer trades created more money. Why discipline beat genius. Darvas did not outsmart Wall Street with secrets. He outlasted it with structure. And that final framework only works if you accept one truth. The market owes you nothing. Once that sinks in, everything changes. You stop chasing. You start filtering. Fear quiets. Greed loses control. The professional is born when rules replace emotions. And that is where most quit. The next step will show how Darvas turned this discipline into millions. It required isolation, rules, and faith in process. Most cannot tolerate it. But those who do never trade. Amateurs add to losers. Professionals pyramid winners. This rule feels backward until results force humility. Darvas used to sell winners quickly. Locking profit felt safe. But he noticed a pattern. His largest gains came from positions he barely touched. Anecdote. A stock broke out from $30 to $35. Darvas entered small, just enough to participate. It formed a new box at 38. Instead of selling, he added. Another box formed at 42. He added again. The position grew quietly, almost invisibly, while smaller trades lost and accounts shrank elsewhere. That single position outweighed dozens of small losses and taught him patience faster than any textbook. Here is the protocol. Start with a small position size. Wait for confirmation before adding. Each new box earns additional capital. Stops move up systematically. Risk remains controlled at every step. Exposure grows only when price proves you right. The amateur tries to feel correct. The professional lets price decide. Maxim. Winners earn size. Losers earn exits. Discipline is the bridge between profit and survival. This required patience that felt uncomfortable at first. Long periods passed with no trades. No movement. No excitement. Most traders hate that silence. Professionals understand it. Doing nothing is sometimes the best trade. Every hour without a trade preserved capital and sharpened judgment. Darvas treated waiting as a position. Cash preserved clarity. Clarity preserved execution. Small, measured entries combined with disciplined pyramiding created a compounding effect amateurs cannot replicate because impatience clouds judgment. The market is unforgiving of guesses. The amateur predicts. The professional confirms. Every add to a position followed proof, not hope. Each confirmation validated size increase. Darvas rarely doubled down recklessly. He doubled incrementally, guided by boxes and tape. Fear whispered, "You are leaving profit behind." Greed whispered, "You can't afford patience." He listened to neither. The market provided confirmation. That was enough. And that leads to the final question opened at the start. Why did waiting outperform intelligence? Intelligence without discipline is a recipe for loss. Predicting outcomes feels proactive, but often kills capital. Waiting as a position shifts risk to the market, not to ego. Price becomes your teacher. Patience becomes your hedge. Every box, every ad, every stop reinforced a single truth. You don't need to know everything. You need to respect what the market shows you. This is where the Darvas Box Secret crystallizes. The structure itself eliminates guesswork. Entries, stops, pyramiding. All rules are reactions to market behavior, not speculation. Amateurs gamble with hope. Professionals respond to confirmation. The simplicity is deceptive. Complexity lures amateurs into activity. Structure lures professionals into results. Silence becomes information. Waiting becomes an advantage. Cash is not failure. Cash is opportunity. By allowing boxes to dictate action, Darvas transformed psychological discipline into financial leverage. Emotional swings were neutralized. Risk became mechanical. Gains became compounding. The market's noise filtered automatically. Observing boxes, respecting stops, and pyramiding winners became a rhythm, a system that converts patience into consistent returns. Professionals follow rules, amateurs chase outcomes. That distinction cannot be overstated. It is the essence of the Darvas methodology. The next step, and the one that most miss, involves combining these elements, waiting, stops, pyramiding, and position sizing, into a complete framework. This is where consistent millions are made quietly, away from headlines, tips, and the noise that destroys amateurs. Patience earns money. Structure preserves it. Confirmation multiplies it. And now, having understood this, Darvas was ready to unlock the final piece. The mindset that converts all of these rules into a complete repeatable system that outlasts emotions, luck, and chaos. Darvas didn't beat Wall Street by being smarter. He beat it by being less involved. He stopped predicting. He stopped reacting emotionally. He stopped trading to feel productive. The amateur wants certainty. The professional accepts probability. Darvas' framework came together quietly, almost invisibly, like a system forming under the surface. Price defined truth. Boxes defined structure. Stops defined risk. Pyramiding defined growth. Fear and greed never disappeared. They were contained. Waiting became a position. Cash became protection. Patience became leverage. The realization was uncomfortable. Most traders feel action equals progress. Darvas learned that inactivity, when structured, compounds as power. Each box he observed, each breakout he confirmed, was a lesson in restraint. The amateur fills every gap with orders. The professional waits for confirmation, letting the market filter opportunity. Maxim: doing nothing is often the most profitable trade. Each pause gave him clarity. Each pause preserved capital. Each pause prepared him for execution when the tape spoke decisively. Markets reward alignment, not effort. Darvas boxes weren't predictions. They were signals. Boundaries set by price, not opinion, dictated entries. A stock moving sideways revealed indecision. A breakout signaled commitment. Stop losses made risk measurable, not emotional. Pyramiding allowed him to scale up only after proof. Position size followed structure. Nothing was random. Nothing depended on hope. Emotion no longer dictated exposure. Maxim: the market pays obedience, not genius. Amateurs argue with price. Professionals respond to it. Waiting as a position became his ultimate weapon. It felt like doing nothing, yet it created leverage. While amateurs chased news, tips and rumors, Darvas watched boxes tighten. Silence itself became information. Cash wasn't idle. It was insurance. Patience wasn't passive. It was active preparation. Each step followed protocol: entry only after breakout confirmation, stop predefined, pyramid only after new boxes confirmed strength. Fear whispered, "You are missing it." Greed whispered, "Buy more now." He ignored both. Discipline dictated moves. Maxim: alignment beats urgency. Timing beats cleverness. This closes the opening loop. Why does waiting work? Because markets reward discipline, not urgency. Amateurs sell before confirmation. Professionals wait. Amateurs average down when wrong. Professionals cut losses fast. Darvas aligned with market reality instead of fighting it. He didn't try to predict. He reacted with proof. Structure replaced speculation. Cash replaced fear. Patience replaced noise. The Darvas box was not a strategy. It was a framework for thinking, observing, and acting in alignment with market behavior. Remember these maxims. You don't get paid for effort. You get paid for alignment. Being late is cheaper than being wrong. Cash is a position. Hold these like a code. Cut losses fast. Size small. Wait for confirmation. Own the process. Follow this, and the edge is yours. The rules don't guarantee profit every trade, but they guarantee survival and repeated opportunity. Amateurs chase outcomes. Professionals own process. The system favors obedience over ego. Waiting as a position converts patience into performance. And if you learned how Darvas mastered risk today, the next lesson on execution timing will deepen it. How to enter, how to scale, how to respond when boxes form and break. These are the final pieces of his framework. The difference between surviving and thriving lies in execution discipline, not prediction. Follow the framework. Respect the tape. Let the market teach. Capital protected is opportunity created. The Darvas box is simple, but its simplicity requires courage, restraint, and unwavering discipline to master fully.